If you are patient, there is potential that many of the stocks that are currently trading at significant losses could stage a recovery and possibly even produce a profit over the course of a longer period of time. There are some stocks that simply aren't worth keeping, of course. However, the following reliable dividend payers are ideal examples of the kind of investments you may have faith in for the very long haul and are listed below. Here are 8 stocks to buy and hold forever. Number 8. Alexandria Real Estate Equities Incorporated. Within the context of the history of specialized research campuses in the United States, the city of Alexandria was one of the earliest operators in the domains of life science and technology. It is structured as a real estate investment trust, and the places that it refers to as innovation clusters are its core area of concentration. These areas are often placed in close proximity to prestigious university institutions and metropolitan talent hubs. It has around 50 million square feet of space spread across the country in excellent locales such as San Francisco, Boston, New York, and Seattle, amongst others. As a consequence of this, the company's stock is in a stronger position to withstand more cyclical real estate investments that are reliant on the level of consumer spending. In addition to this, it shields it from the shifts in commercial real estate trends that have been generated by the rise of telecommuting for white-collar employment. These shifts have been caused by the rise in popularity of working from home rather than going into the office. Number 7. Campbell's Soup Company. In addition to the soups that bear the company's name, Campbell's also manufactures a vast assortment of other well-known consumer goods, such as V8 drinks, Pepperidge Farm baked goods, Snyder's pretzels, and Pop Secret popcorn, amongst many others. Since its founding in 1869, the company has shown that it can weather a variety of different kinds of economic storms with ease, proving that it is resilient in the process. In the end, it doesn't matter how awful things are for the general stock market or for consumer spending. The fact that we all have to eat won't change regardless of what happens to the stock market or consumer spending. Because investors are fleeing to safer, risk-off stocks like this one, the share price of Campbell's Soup Company has managed to post a little gain from the beginning of 2022. Number 6. Amcor plc. Have you never come across the company Amcor in your life? It's possible that the time has come for you to educate yourself on this low-risk investment that pays dividends and has a long-term perspective. Amcor is a company that specializes in the manufacturing of a wide variety of packaging products, such as pouches, containers, cans, bottles, and jars, among other options. The task is not very fascinating, but it cannot be avoided due to the vast range of industries in which the company's products are employed. These industries include the beverage industry, the medical industry, the personal care industry, and a number of others. Because of this, it is possible to have a large consumer base, which ultimately leads to growth that is slow but consistent over the course of the longer term. Number 5. Cardinal Health Inc. Cardinal Health is a stock that has a low degree of risk and is in the business of supplying goods and services to organizations that are engaged in the process of providing medical care. These organizations include medical offices, nursing homes, and surgery centers, among others. This includes the provision of needs such as medical supplies, laboratory products, personal protective equipment, bandages, and other necessities which may not have large profit margins but definitely serve an enormous need. This $15 billion healthcare player has been able to sustain a constant revenue stream as a consequence of this, which has resulted in 35 years of consecutive dividend increases. Because of the company's strong collaborations with healthcare facilities and its business model, which does not run the risk of being disrupted by therapies or technology of the next generation, it is a stock that should be purchased and held for the foreseeable future. Number 4. Consolidated Edison Inc. It is possible that it is not the most actively traded utility stock on the market, but it excels over the majority of its rivals when it comes to its capacity to keep its value over the course of a long period of time. Within the metropolitan area that encompasses New York City, it distributes electricity to approximately 3.5 million residents and supplies natural gas to an additional 1.1 million customers. This customer base is not susceptible to change, despite the fact that the demand for energy in certain regions of the country may be more unpredictable than in others. It is not only one of the oldest publicly listed utilities in the United States, but it also has a track record of increasing the dividend payments it makes to stockholders at least once every year for the past 48 years. This accomplishment is a testament to the company's strong financial performance. It's possible that there are other stocks in the industry that have larger market capitalization or offer higher yields, but this is the kind of stock that you might want to buy and keep for the rest of your life if you can afford it. Number 3. Merck Company Inc. As of the middle of this year, Merck's stock price has increased by more than 15%, making it one of the companies that has performed the best so far in 2022. This is in spite of the fact that the majority of Wall Street has been experiencing a lot of difficulties recently. Nevertheless, this big pharma company is not only looking amazing in the short term, it also has tremendous long-term potential, and investors should not overlook it simply because it is looking terrific in the short term. Keytruda, therapy for cancer, and Januvia, a medication for diabetes, are both included in the portfolio of multi-billion-dollar blockbusters that Merck possesses. The business Janssen is responsible for the production of both of these goods. In addition to this, it was mentioned earlier this year that it is in the process of negotiating a contract to purchase Seagen Incorporated, a cancer biotech business situated in Seattle, for the amount of $40 billion in order to further fuel its expansion. Number 2. Unum Group. The multinational insurance and benefits provider Unum has its headquarters in Tennessee. However, the company's services are offered not only in the United States, but also in the United Kingdom and Poland. The provision of group insurance, including disability, life, dental, and vision coverage to enterprises for the goal of improving the working conditions of their employees, makes up the vast majority of the company's activities. Due to the fact that Unum has been able to amass a vast amount of experience in this sector ever since the firm was established in 1848, not only is it an exceptionally safe industry, but it is also one in which it excels. A dividend growth of this kind is precisely what you should be looking for when it comes to a holding that you intend to keep for the long term. Number 1. Altria Group Inc. Altria, the company that owns Altria, is a manufacturer of a wide variety of tobacco products, including cigarette brands such as Marlboro and Black & Mild, which produce pipes and cigars, as well as smokeless tobacco brands such as Copenhagen and Skoal. Customers aren't exactly in the dark when it comes to the dangers of tobacco because studies on the subject have been published for decades. This is despite the fact that these products aren't exactly great for your health. And from an investment point of view, it has maintained its track record of generating steady low-risk returns for a number of years, including an exceptional history of more than 50 dividend increases over the course of the last half-century of its existence. However, the company's strong management and solid balance sheet may imply that the current pullback represents an excellent opportunity for long-term investment in a stock that has staying power. Recent difficulties with the company's investment in Juul, a maker of electronic cigarettes, have resulted in a drop in the stock price. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.